Eric, to get us started, give me two truths and a lie, please.
All right, thanks, George. Let's go with I am an amazing orange peeler.
Okay.
I once I once hit 25 foul shots in a row, and I'm an incredible dancer.
Real Renaissance man, Eric. Incredible dancer, 25 foul shots in a row, and you're an amazing orange peeler. Wow. Holy cow. How does one even gauge those responses?
mm,
So-
I got my poker face on for you.
these are these are awesome. All right. All right. I don't think you hit 25 foul shots in a row, Eric.
That is the lie.
Ah, yes. Have you hit any foul shots in
That
a
is
row?
well. I think when we did it, I think I hit 12 with my record. Basketball was never my thing.
Well, I think that's awesome. Let's go to
Yeah,
dancing next. Tell me about that.
just just hearing a good song and getting after it. You know, what else could you ask for?
That's it, man. So it's
I
it's
I didn't say I might not look good, but in my mind I might look good.
so
Somebody else may think I'm having a seizure, but that's okay.
so it's not classical training or anything like that.
No. No.
It is a passion
It's,
when the beat grabs a hold of you, you just got to go with it. I totally get
you
it.
just got to go with it. And
Dance
there's a
like
couple beers involved,
okay,
a few
right.
beers involved.
Yeah.
Yeah.
That'll certainly help too. All right. And then back to number one, you are an amazing orange peeler.
Give me an orange any way you slice, any way you want, and I'll have it peeled with no utensils in under a minute,
Wow.
and I can make it to where you can put the rind back together and almost almost not know that I peeled it.
Wow. Is
And
that
I don't know why that's something that I was able to perfect, but so now what I do, people, if I'm around somebody and they question how good of a peeler I am, I'll peel it with my back to them. I'll take out the orange contents. I'll put the peel back together and I'll throw them the peel, and it's still together, and they get all freaked out. But it's like you think I'm gonna throw a real orange at them. But then as soon as they touch it, then the peel comes apart. So a
incredible?
skill developed. Yeah, that
No,
I always say that and $1.50 gets me a ride on the subway.
yeah, or maybe a couple more oranges. So I love it.
Yeah, yeah.
And no classical training there either.
No, that's all just trial and error.
Okay. How do you do with a couple of beers in you with the orange?
Usually those skills get a little bit better, and then
Okay.
and then I was bet one time to try it with a lemon,
Mm,
and it's not the same.
yeah. Yeah.
And the trial and error on a lemon is a little bit more, let's say, painful than it is with an orange.
Okay. Well, there you go. Live and learn.
Yeah.
Well, I think I lucked out. Thank you for your thoughtful answers, and I appreciate your passion for peeling oranges and dancing, and maybe apply that to your fall shooting.
Yep. Yep.
Who knows? All right.
Put it all together.
Well, finally, finally put it all together. All right. Well, there it is. Off to a great start. In terms of the business, what's top of mind for you right now?
I think the top of mind is talking to people about the volatility in the world, and it's not that you got to accept and take it on the chin when the markets are volatile, but it's also you got to take it with a little bit of a grain of salt and understand where you're at with your goals. And as I've seen with the financial crisis and COVID, and even this year, when the markets are volatile and they're plummeting, the first move a lot of people make is just, oh, let's get out and move to cash. And that's not always the best course of action, always not the most prudent move. And you make, as with life, if you make any decision based only on emotion, it tends not to be the best decision for you. So a lot of when the tariff war started, and we were talking to clients about the volatility in the market, there was a lot of fear there, and that's totally understandable. I'm not saying you don't have to don't have to be concerned, but it's what actions do you take about that. So it's really trying to help people understand, okay, what are your goals? What's this volatility really mean to you? I mean, is it something that you can absorb? Because for most people it is. It is. And if any changes they make, you just don't want to throw the baby out with the bathwater, derail the whole strategy because you had a bad day, the market had a bad day.
So I'm obviously work in the financial services industry and have for a long time, so I understand that I'm supposed to buy when things are low and sell when they're high. Do most people understand that? I guess that's so obvious to me, but not necessarily obvious to everybody else.
That's a good question. I think people understand it kind of conceptually, but I think when they try to execute, it's harder. And also when the markets are volatile, it's doubly as hard because not only you got to make one great decision about when to get out of the market, but you got to make that second decision about when to get back in. So making two great decisions about the direction of something that is pretty untamed. I mean, the market, people can say, okay, this market's going to go here, going to go there, but it really is untamed. And if you're trying to make two great decisions about when to not only get out, but also when to get back in, chances are you're going to mess up or not get the greatest results for one or both of those decisions. And I think over the course of the S&P 500, it's 25-year period, it returns around 7%. But if you miss 10 of the best days, then your return is cut in half. And why would you miss 10 of the best days? Well, because you got spooked over something that happens, and you pulled all your money out and went to cash. But then when you pulled all your money out and went to cash, one, did you make a first great decision? Did you pull all your money out at the right time? But then two, did you miss the upswing? You captured all the downturn, but did you capture any of the upside? And again, that's where you have to make that second great decision, and that's hard too.
I think that I certainly have a tendency to forget that they have to be right twice, not just once, not just
Yeah,
picking a great company. So probably three times. You have to pick the investment, then you have to pick the time to buy it, and then to pick the time to sell it. Lots of opportunities to screw
yeah,
that up.
yeah, yeah, definitely. And it's hard.
And then there's a lot of bias there because I think I'm a better driver than most people, but evidence would suggest that I'm just as good as everybody else. And I probably a lot of people out there, maybe people you work with are probably super intelligent people and they think that that then maps over and maybe it does to other aspects of life, but not necessarily when it comes to investments.
No, I mean, and I'm sure as you do, I work with a bunch of brilliant people as clients, and it's more than it's not so much the intelligence; it's managing the emotions. Money's a very emotional thing, especially money's especially emotional when your statement shows less this month than it was the month prior, and it's hard to make those unemotional decisions. I think that's what we as you and I as financial planners do is we try to take the emotion out of the decision making process, take the bias out of the decision making process, so we can line up what is good and what is prudent for our clients. So we're not the ones that are dealing with the day to day emotion. We're saying, okay, let's be a little more pragmatic about our decision making process versus looking at the intraday trends of what's happening in the stock market, which again are intraday trends, and are they trends based upon fear, greed, news, something that just happened 5 minutes ago. I think us as planners, we're able to take a lot of that emotion out to help our clients make good decisions.
And I don't even know it if I were not in the business. Well, I take all that back. I used to watch Fast Money back in the day, back when I was like 5 years into the business. So that would have been like 2005, six, seven. And what a great show that was. And there were green arrows and red arrows, and you got Kramer. And oh my gosh, I was a market expert. And then I'd make decisions based on what those people talked about, and I lost a lot of money. So it's not helpful to be relying on outside things like that, particularly knowing that these news networks have to produce content 24 hours a day on a lot of different channels. So,
Yeah, I literally had a conversation with a client yesterday who was talking about a lot of things that scared her, and it's not that, and she's a smart person, but she was getting caught up in a lot of the day to day news, and she was saying, I think the government's going to come and take my IRA away. And I was like, I'm sorry, like the government's going to come take your IRA away? Like, why are we going to do that? And she's like, well, I saw this on the news and I saw this on Twitter. I was like, okay, let's take a step back. The government's not coming to take your IRA away. And, you know, maybe don't watch as much news. Don't turn off some of the news channels. Maybe don't, because like you said, it's so much more of clickbait now versus actual reporting on whatever aisle you're on, side of the aisle you're on, right? It's not about necessarily what's truth, but what's going to make you click and what's going to make you stay, what's going to make you emotional. And I said, so I calmed the situation down. She's like, I felt good talking with you, but it was, the news has got me so stirred up. And I was like, yeah, don't believe everything you hear. And I felt badly for her because she was so scared to start the conversation and really thought that, the police or the IRS is going to come take her IRA away. Like, it's not going to happen. Again, so a lot of times what we do, right, is talk people off the ledge when the time is right.
I wouldn't want to feel that way if that's how she felt. What a terrible thing, shame on people for
Yeah,
for scaring her to do that. And, I'm glad that
yeah,
she obviously had you to talk to ease those fears. So,
yeah.
like so many things in life, it's these false dichotomies of either I'm going to be super active in the markets and trading all day long. But what you're advocating for isn't don't do anything at all and just let things go. It's let's take a thoughtful approach. Let's actually put a plan together and talk about goals, talk about what your understanding and tolerance of risk and volatility are. So it's middle ground.
Total middle ground, because I think if you live on the opposite ends of the extremes, you're probably not going to be able to reach your goals. But you said it exactly right. Like, what are the goals? What's the strategy to get you to your goals? And are there threats that could potentially derail that strategy? And usually, one bad day in the market is not going to be something that's going to derail that strategy. So that's it's coming kind of level setting. All right, if people are scared, and I'm not telling anybody ever how they should feel. I actually tell clients that if they do feel concerned, they should talk to me more. But then let's talk about it. Okay, here's the strategy. Here's the event that happened. Here's the goal. And did the event that occurred, and if it's a bad day in the market or a bad week in the market, whatever it may be, is that derailing the strategy? More times than not, that it's not derailing the strategy. But obviously, as planners, we want to listen to our clients. We want to hear what they have to say. I want to hear what's concerning them, because then I can help plan for any of those threats. But you said it exactly right. What's the strategy? What are the goals? And if what is the event that's potentially going to derail the strategy? Is it going to really derail it, or is it more just, okay, this is our gut feelings in the moment, and we can move past that, then maybe we realize we're still on track to achieve our goals.
It's so interesting that the market could be down 40% in a day, and you could probably call a cross section of your clients, and some would be absolutely terrified, and some would be licking their lips, looking for opportunities to buy. So that we sort of oftentimes paint with this broad brush of, oh, market volatility bad. Not necessarily.
Not necessarily. I think it's also healthy too. I think it's healthy. Sometimes it flushes out the market a little bit. The markets don't always, it doesn't always go in straight lines. And so there's going to be times when the market does need to kind of flush itself out a little bit. And again, is that time to make an emotional decision about your overall strategy? Probably not. Probably not. Willing to listen and see and hear if there's something more going on besides just a bad day in the market. But more times than not, it's something most of us can handle. Now, if somebody's ready for retirement, or they're getting ready to retire and they can't won't be able to handle some of those days in the market, then we need to make some moves to execute. Again, I don't want people to just sit there and take it on the chin, but I just want to make sure we're making decisions not in a vacuum. We're making decisions thinking about the strategy and thinking about the goals.
Yeah, yeah, I appreciate that. It's not just we're just going to ride the market up and down and up and down and up and down. Sometimes maybe, but it's all just going to be dependent on what somebody's trying to accomplish. And obviously,
Yeah,
things come our way and different opportunities. And sometimes I need money immediately, and sometimes I can plan for things. So it just all sort of depends, which is sort of a lame
yeah.
financial advisor answer that I just threw out there. It just depends.
It just depends. It just depends. Or when we answer a question with a question. Oh, I even preface that now when people ask. I'm like, well, you're not going to like this because I'm going to answer your question with a question. You're like, you're not allowed to do that. I'm like, well, I'm allowed to do it. Give us a little more clarity if I can answer a question with a question.
That's right. Trying to drill down and figure out what's going on.
Yeah,
Yeah, it's interesting. I love the idea about the tail wagging the dog. I never want to run from my
yeah,
emotions. I want to fully feel them, but I'm not interested in necessarily acting on all of the emotions that I have. And there's probably fear and there's shame and there's all sorts of different emotions that I always have. And then when something new happens, maybe I'm acting too quickly based on my past, or I'm not asking for help when I really would like to have a conversation with somebody. Um, so you tell me, I think that the more we can just be really clear in what we're feeling about our circumstances and be open with, especially with our advisors, it's probably for the best.
definitely for the best. I have a very long tenured clients. They're a couple, two teenage girls, and the wife does phenomenally well at her job. She's reached a level at her job that most people, nonetheless, not even most women, had not made on Wall Street. Like she's done really, really well. But she grew up in a situation with her family where money was very tight, and the it was kind of a rough childhood for her. So every conversation that we have, she comes from a place of scared about money. So even when we're doing something prudent, like for example, when we got life insurance for when her kids were born, it was okay. She had went through this thought process of such fear of doing the wrong thing, and it took a long time for her just to implement something very simple for her kids, just getting some life insurance. But it was because of her upbringing, because she had such a negative emotional reaction to money based upon how she was brought up, that now there's so much analysis paralysis and fear that it takes a lot more hand holding for her to do for me to say, okay, these are the things we're doing, these are why they're right, these are why they're helping you to go get to your goals. And and that's fine. I'm glad that I'm able to be there. And if some people, we have one conversation, they're like, yeah, this makes sense, let's do it. Or in her case, it's maybe 5 or 6 conversations where sometimes she's even apologizing about, like, I know you just explained something to me, and I'm like, no, don't apologize, it's okay. But she just needed to hear it, because again, her relationship with money from growing up was so just negative. It's something that's now in her DNA. And again, she works on Wall Street. She's a managing director of a prestigious Wall Street firm. But when it comes to her own personal finance, there's a lot of fear there, no matter what she does. So it's trying to get through some of that. And that's I feel kind of privileged that I'm able to be there as that wingman, and give her that guidance and give her that ability to kind of come down off the ledge.
It's just such a fantastic human thing to professionally do something and to do it so well, but to be so sometimes fearful of how we do it in our own lives, sometimes irresponsible. I'm not saying that this is what your client is doing, but just I think it's fascinating. It's physician heal thyself, or it's the cobbler with his kids with holes in their shoes kind of a thing. So
Yeah, definitely, definitely. You see a lot of that, right?
yeah, and I think it's something that's beautifully human of us, and how we can know that we're supposed to buy when things are low and sell when things are high. But I want to do the exact opposite. I don't want to think about Bitcoin when it's at 10,000. I want to talk about when it's at 150,000. You know.
Yep. Yeah. Yeah.
Speaking of cryptocurrency, not necessarily, I guess more speculative type investing, and you hate to try to lump any kind of a group into a box or a monolith, but there's a because I know that you work with physicians, and I think some of them are notoriously bad investors, and my perception is that many are extreme risk takers when it comes to investing and unfortunately fall prey to scams more often than maybe other groups are. Is that your experience? You could tell me I'm wrong.
No, I mean you're right, and it's kind of expanding on that. I mean, physicians are never taught financial wellness or investing or anything like that in med school, their fellowships, residency, and then they're put into practice to worry about the outcomes of their patients. And personal finance usually takes a back burner. And then when it becomes something that they have to focus on, they're like, I've never been taught any of this stuff on how to do this. So it's really a conundrum for them on that front. And the other thing is that they have very high demands that have been hammered into them from med school and residency. So they have very high demands, and they want somebody that can meet those high demands. So that's another factor that makes it tough for them. And then on top of that, most physicians or most people, when they see that somebody's got that MD after their name, that or the DR in front of their name, that they're all just worth gobs and gobs of money. And so they're always being hit up for, and it's not, they're pinged a lot by financial advisors, by pharma reps, by medical device reps, by friends and family thinking, oh, he's a doctor, he can afford it, or she's a doctor, she can afford it. So there's all these outside influences, and I would say a lot of negative outside influences trying to get into the doctor's wallet when it's like, okay, you know what? They want to be able to retire at some point too. They want to be able to provide for their family at some point too. So it's when I'm working with physicians, it's trying to help understand, okay, what is the relationship with money? I have a client who is probably the smartest person I know. She's also really funny. But whenever we're talking about her finances within a client review, she's like, Eric, stop, 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 stop. I'm like, what? What's up? And she's like, you realize I hate talking about this. I'm like, I go, you're like the smartest person I know. I go, you enter in any room and the average IQ goes up by like 50 points just because you're raising that bar so high. She's like, listen, that may be true, but I would rather have my eyeballs tattooed than talk about my money. I was like, okay, that's a new one. I got to recycle that one. I never heard that one before. So for physicians, it's a lot harder, I think, for them to find financial security and financial freedom. And I add another factor into it. They're not getting paid as much as they used to. You add that into it too. I mean, the expenses that they're dealing with are going up. The reimbursements are going down. They're battling with insurance companies. So the day of every single doctor is worth, 8 or 9 figures. It's not. It's kind of a myth. But people haven't really changed their mentality. So there's a lot of outdoor factors coming in and working with physicians where they kind of feel like they don't have that wingman, and all these other factors are trying to get into their wallet. So it's definitely challenging working with physicians because of these different factors. But I think it's also rewarding because when you see the before and after pictures, it's drastically different. You know that they're on the right path finally, and it may have taken a little while, but it's I think it's almost extra rewarding because you saw where they were coming from. You know all these outside factors and how they're negatively impacting things, and you're seeing how the output is, and the output's usually pretty positive.
It's so well said, and kind of going back to everything we've been talking about, just tune everything out, you know, just because you assume
Yeah,
something or you think that, or, there's people who want to extract resources from you because you are a doctor or an MD or whatever. And all the more reason just to focus on figure out what matters, put a strategy together and deal with things as they come up.
yeah. I mean, I was out with a couple of attorneys that are friends and a couple of doctors that are friends and a couple of folks that weren't doctors, and we were talking. One of the attorneys is a litigator, and he was saying to one of the doctors who was a neurosurgeon, he said, because anytime I see somebody with the MD after the name, he's like, I look at you guys like a big fat juicy steak, and I'm like, oh man, that was kind of scary. I mean, he had a couple of cocktails, but it was I think the reality, and the physician looked at me and looked at him like I didn't say it, like, but it was, yeah, I look at you guys like a big fat juicy steak, and I'm like, oh man, I'm like that's the perception. And again, that makes it harder for physicians to get the financial guidance that they need too.
Like, thanks for your honesty, Brian, but take it easy, buddy.
Yeah, right.
How funny. You know, I always appreciate when people tell me, I'd rather know exactly what somebody's thinking than to try to guess about it. So respect there.
Yeah,
Well,
yeah.
Eric,
There's
you've
definitely some shock value to that statement. We're like,
well,
oh my God, you just said that out loud?
it made me want to have more cocktails with litigators because that would but then 5 minutes would
Yeah,
go by and I would think, why did I do this to myself? So
exactly. And we're like, check the time. Got to
this
rearrange the stock
this
drawer at
wasn't a
home
good
to
idea.
get out of
So
there.
somebody paged me.
Yeah.
Now we can't do that anymore.
Yeah.
Or you've already given us a lot, Eric, but we're ready for that difference making tip. What do you have for us?
Don't let emotion get in the way of making a really great decision. And if you are someone who, if you're working on your finances and you're feeling concerned, reach out to somebody. Reach out to a trusted financial advisor, financial professional, because you know what? You meet somebody that's great. I think most of us try to do great things for our clients. We're going to be there to help them and be there in good times and bad times. So don't let that emotion really derail you.
Well, I think that is great stuff. That definitely gets it. Come on. Wonderful way to round out our conversation. Thank you so much for coming on. Where can people learn more about you? How can they engage with you?
Yeah, George, thanks for having me. My website's the best place. We've got a bunch of some freebies. We got an estate planning ebook, a retirement planning ebook, some cheat sheets. We do a video of the month, which I really like. Talks about what happened in the market in the past month and some things to look forward to. And that's on my website, which is emangold emangold.com.
Excellent. Well, if you enjoyed as much as I did, show Eric your appreciation. Share today's
Definitely.
show with a friend who also appreciates good ideas. Go to emangold.com. Check out all the great resources. Pick up those ebooks on estate planning and retirement planning. Certainly areas that could probably all get a little bit better at. And check out his market recaps as well. Thanks again, Eric.
Thank you so much, George.
Finally, friendly reminder, there's never going to be anybody more interested in your financial success than you are. So act accordingly.